Digital workflow automation for banking, AML, KYC, and payments. Digital workflow automation for banking, AML, KYC, and payments. That's what we're tackling today. If you've been wondering about digital workflow automation for banking, stick around. Now, moving on to what is digital workflow automation for banking? Digital workflow automation for banking is the use of software to execute compliance, onboarding, and payment tasks without manual intervention at each step. That definition is simple. What's not simple is how it works when your data comes from a dozen different sources: identity documents, transaction histories, sanctions lists, credit bureaus, and internal risk scores. Stitching those together manually is where errors accumulate, and where regulators find problems during audits. The three core workflows most financial institutions need to automate are. Each of these can be automated. The question is how to do it without spending $500,000 on enterprise compliance software. Next up, moving on to AML compliance automation, what fintech startups get wrong. The most common mistake fintech startups make with AML compliance automation is treating it as a one-time setup. They build a watchlist screening step at account opening and call it done. That misses the ongoing monitoring requirement entirely. FinCEN's AML program requirements apply to banks and money services businesses and require continuous transaction monitoring, not just screening and onboarding. That means your AML automation needs two distinct components. Azure Logic Apps handles the orchestration here well. You define trigger conditions, and the Logic app routes each transaction through screening APIs, logs the result to Azure SQL or Cosmos DB, and either clears it or sends an alert for review. Now, KYC verification automation for faster customer onboarding. KYC verification is where most banks lose customers before they even open an account. The average banking onboarding flow takes 7 to 10 days when handled manually. Automated KYC verification can cut that to under 4 minutes for straightforward cases. Here's how a well-built automated KYC flow works. Azure Cognitive Services handles the OCR and document analysis natively. For liveness detection, Azure Face API or third-party SDKs like iProve integrate directly into the flow. The whole chain runs as a Logic app or Azure function, depending on how much custom logic your risk model requires. Let's talk about now, payment processing automation and fraud risk. Payment processing automation is the most operationally complex of the three workflows, because payments involve real-time decisions with direct financial consequences. The core components of automated payment processing. For startups building on Azure, the Payment Automation on Azure FinTech Starter Guide is a practical starting point. The key services: Azure Service Bus for reliable message queuing between steps, Azure Functions for fraud scoring logic, and Azure API management for connecting to processors like Stripe, Dwolla, or Galileo. Let's talk about Microsoft Azure tools for banking workflow automation. Azure has more banking-relevant services than most fintech founders realize when they start scoping their compliance infrastructure. The challenge is knowing which ones to combine and in what order. Logic Apps is the orchestration layer for most banking compliance workflows. It connects your identity verification APIs, payment processor, compliance database, and alerting system through a visual workflow builder. For teams without dedicated back-end engineers, Logic Apps can automate a compliance workflow in days rather than months. The practical limitation: Logic Apps is not the right tool for high-frequency operations that need sub-100 ms response times. For payment fraud scoring running during live transaction authorization, use Azure Functions instead. Let's talk about moving on to running AML and KYC automation together. Most guides treat AML and KYC automation as separate projects with separate tools. In practice, they share data and work better when they share infrastructure. KYC produces a risk score at onboarding. AML uses the risk score to calibrate ongoing transaction monitoring thresholds. A customer rated low risk at KYC might trigger AML alerts at $10,000. A customer rated high risk might trigger at $1,000. Keeping those systems separate means manually syncing risk ratings between them, which is exactly how inconsistencies build up and generate audit findings. The cleanest architecture, a central customer risk profile stored in Azure SQL or Cosmos DB, updated by both the KYC onboarding flow and the AML transaction monitoring flow. Both systems write to the same risk score field. Both read from it. Logic Apps orchestrates the workflows. The database holds the shared state. Let's talk about next up, what banking workflow automation actually costs. Most fintech content stays vague on cost. Here's a realistic breakdown for a startup processing 50,000 transactions per month on Azure. This excludes third-party API costs. Identity verification vendors typically charge $0.50-2.00 per verification. At 2,000 new customers per month, that adds $1,000 to $4,000 per month on top of infrastructure costs. Compare that to a compliance analyst at $65,000 per year and the math clearly favors automation at high volume. At low volume, manual review is still often cheaper. The crossover point for most startups is around 1,000 to 1,500 monthly verifications. Let's talk about next up, conclusion. Digital workflow automation for banking covers three interconnected areas: AML screening, KYC verification, and payment processing. Getting any one of them working reduces manual work. Getting all three connected through a shared customer risk profile is where the real savings appear, typically a 60 to 70% reduction in manual compliance hours for startups that implement the full stack. Azure gives fintech startups the tooling to build banking workflow automation at a fraction of enterprise software costs, but the architecture decisions matter. Treat KYC and AML as one system sharing a common data layer. Use Logic Apps for orchestration and Azure Functions for real-time decisions. Build the manual review queue from day one, because automation handles most cases well, but not every edge case, and regulators will ask about the ones it misses. If you're building a banking or fintech product and want to scope what digital workflow automation for banking looks like for your specific transaction volumes and compliance requirements, reach out to the Q Services team for an architecture review.